What's going on, guys? SmartHelping.com here. We've got a pretty cool financial model about mortgage repayment comparison and extra payment planner. This is pretty cool. So I've been working on this for a little bit and I'm going to share it here. Don't forget to like the video, subscribe. It all helps support the channel. Now, for this template, if you want to get it, the link to buy it will be in the description box below. $45 one-time fee. Completely fair when you see what this thing can do for you. So this is going to be a personal finance template, meaning like any essentially any individual that has a mortgage or family uh, can benefit from this greatly. And so the first tab here is going to be a comparison of your mortgage balance over time. The blue line is if you just do a regular payments of your mortgage, just like it's set up every month, and you do that for 30 years. And you can adjust the terms on the loan. We'll get to that in a second. And then the red line here is if you're making extra principal payments over time. You can see I just put in some arbitrary numbers, so it kind of goes down quicker, and then it goes back to the normal curve. But you can see the balance. If you put extra payments, you're going to pay off your mortgage faster, and by doing that, you're also going to have some savings and interest, which is this dotted line here, which shows the cumulative savings over the life of the mortgage. And you can also see how many payment numbers you save by putting extra down, because it just means if you continue making the same payment amount but then do extra, you're going to pay it off sooner. So this is a really nice visual I put together. To use the template, it's real simple. You start with the standard repayment. You put in your mortgage terms, current mortgage, remaining term. So if you're running this, let's say you're 5 years into your mortgage and you've already paid off some, you would just put your current mortgage balance here, whatever the term is remaining on the loan, your interest rate, the payments per year, and the first payment date you're modeling. If you have variable interest rate and you think that's going to change over time, you can adjust that manually in this column. But if it's just a fixed rate, just put the rate here and it will flow through. For example, let's say at a $175,000 mortgage. So let's say it's a 20-year term, 5% interest. So you see all the numbers automatically update. And so what this does is shows you the standard amortization, your general payment, principal and interest over time, and the balance over time. Now, where we get into some cool stuff is we now have a separate amortization schedule that shows the same mortgage terms, but allows you to enter an extra payment in each period. And I just did this. It's not like you can manually input any number here. So you can try to increase that over time, keep it the same, start it sometime in the future, or stop it. Um, you can see if we put it to 0, these will just be the same. Even one extra payment of $500, you can see the interest savings over the whole term is $850, and you end up paying one payment. You get done one payment early. So you can put in anything here over time, and it will all update. You've got the base case, standard repayment, the payment, extra payment case, and then here's your savings. And so that all updates on both automatically. All you have to do is change the terms of the loan to match yours, and then put in what you want to make on extra payments. And you could do like, one payment at the end of each year. Just do like an extra principal, 1,155. You can just, do that every 12 months and see what that looks like. But there's all kinds of strategies here. But the key is, I try to make this as dynamic and usable as possible and very simple to understand. Um, you got your base mortgage, you got extra payment case, and there's the savings results, time savings, and here's a nice summary. You can see with only one extra payment, it's almost identical. Let's say you did this for even just a couple times. let's see, 25, 36, 48, just a couple for 5 years. You make one extra payment, you can see you start to get a little bit more savings and you start to save time. But you could put this to however you want. All kinds of different things would affect what your numbers are input here. I'm just going to zero this out for a blank template start. So if you do purchase it, you can start from scratch. All right. That's all I got for you. Like I said, the link is in the description box below. And I'll see you guys on the next one.